All right. Good evening, everyone. Now, before I start, let me just do a sound check real quick. You should see a poll right now. So if you can hear me, click on yes. If you can't hear me, click on no, and it'll just give me a reason to see if. All right. So most people can hear me, thank God. Let me just wait for a bit more to see if there's anyone that votes no. Um, just a bit more. All right. So should be good to go. Let me just close this real quick. All right, so good evening, everyone. Welcome to tonight's webinar. I'm your host and speaker, Brian, and I'm a dealer here at the Capital. Now, before we get into the core content of the webinar, I just want to do a quick introduction to Philip Capital, as well as the products and services that we provide. So let me just get straight into it. It's going to be real quick, just 10 minutes of your time, and we'll get on the way, yeah? All right, so this is just a disclaimer that this presentation has not been reviewed by the Securities Commissions Malaysia and is only provided for general educational purposes only. It is not any financial advice to buy or sell any investment at all, because investing is a very risky endeavor. You may want to seek advice from a qualified financial advisor before you make any decisions. Hence, PCSD and me included, we are not responsible for any decisions you may make based on this webinar. All right. So just a bit about the Capital. We were incorporated on the 7th of October 1995, and we are a wholly owned subsidiary of the Capital Holdings Sdn Berhad. Formerly you may know us as Flip Futures, because back then we only offer futures and CFDs. But in recent years, we started to offer stocks as well. So that's why we rebranded our name. So yeah, we are a trading participant of Bursa Malaysia, and we are also a participating organization of Bursa Malaysia Securities Berhad. And most important, we are also a holder of the Capital Market Services License, which means we are legally allowed to offer you these products and services. All right, so we have 11 Flip Investor Centers across Malaysia, known as PICs, with our headquarters located in Kuala Lumpur. So if you are nearby any of these states, do drop by to say hi. Personally, I'm from PIC Kuching, so if you are nearby my state, or if you come over, do drop by and say hi. I'll definitely, entertain you for a bit. Yeah, so this is our awards winning Bursa Excellence Awards. This is our track record, our history. Just recently, in 2022, we won the first runner-up for the best retail derivatives trading participant, as well as the second runner-up for the best overall derivatives trading participant. Right, so we've won multiple awards throughout the year. So this kind of shows our quality that we provide to our clients. And we have a wide global network situated in around 15 countries, which means you can find our offices in 15 different countries across the world, which also allows us to have a global coverage, right? We have partnered up with exchanges in the US, like the CME Group, the CBOT, COMEX, NYMEX, all the way in Europe, with Eurex and ICE, in Singapore, SGX, Hong Kong, as well as Japan's JPX and Tolcom. So what this means is that if you want to trade any of the products listed on any of these exchanges, you can do it through us, right? We are kind of like the middleman. So big props, many products, right? So we are your one-stop solution for your trading, because like I mentioned, we offer many products across the board. First off, we have futures, like index futures, metal futures, like gold, right? And we also have the good old stocks, like local Malaysian shares, US shares, Hong Kong shares, as well as shares, CFDs, such as Bursa shares, the New York Stock Exchange share CFDs, and all of the good stuff, right? We are your broker of choice because, as you've seen, we have won many awards throughout the years. We also offer 24-hour broking as well as execution support. We also offer advisory services to our clients and updates on the latest market news, right? So we have this program called Learn with Flip Capital, where we have free one-to-one coaching sessions, as well as free seminars and webinars just like this one. Basically, in the free one-to-one coaching session, we have mainly product knowledge, which is basically us bringing you through an introduction to futures, CFDs, or stocks, as well as a part on charting system, where we will bring you through our platform coaching so you can start trading without any feeling of inconvenience, basically. So if you are interested in joining our future seminars and webinars, you can definitely scan this QR code. I'll stop on this page for a few seconds. But if you miss it, don't worry, because we have the link on our website as well. All right, so moving on, we have the weekly market calls as well, where on the left you have the market views and updates, where our analysts will present weekly views and updates every Monday at 11:15 a.m. And on the right-hand side, you have the live counter technical analysis, where you can discover weekly trends and potential entries and exit levels through our technical analyst, Zain Al, every Monday at 8 p.m. So if you are interested in joining any of these free events, do scan this QR code. If not, we also have the registration links on our website. All right, moving on. So if you want to open an account with us, you can do that with this QR code right here. It's hassle-free, and you can open it online, regardless if you are in Kuching or not. You can open it on your phone, desktop, laptop, whatever you want. It's very quick and hassle-free. Just scan this QR code right now to open an account with us. All right, so we have the part where we introduce you to our trading platforms. First off, we have Nova, which is our platform for future trading. We have over 90 technical indicators. You can buy and sell directly off the charts and all of those cool things. And the best thing is that we are both on the Apple App Store as well as the Google Play Store, and we are also we have a web-based version of it, so that's really convenient for everyone. Next up, we have our stock trading platform, which is Poems Global 2.0 MY. Same thing, we have a dedicated desktop version. We also have the mobile version, which is both on the Apple App Store as well as the Google Play Store. All right, next up, we have the Flip CFD Trader, which is your ideal all-purpose trading platform for CFDs. This one, at the moment, we only have it for desktop versions. So maybe in the future, we will, have a mobile app coming straight up, but as of now, it is on desktop only. All right, so moving on, we have the promotional section. So at the moment, we have a promotion which is called Trade Singapore Shares, where you can trade and win up to 200 ringgit Airline vouchers as long as you trade Singapore shares through us. So if you are interested in this, do scan this QR code for more information. The promotion runs from the 1st of January until the 29th of February of this year. So around 2 months, right? Okay, so let me just drink some water and let's just get straight into the content for tonight. That was about 8 minutes, right? So less than the 10, I promise you all. I try to get that out of the way as quick as I could because I know you guys are just itching for that core content. So welcome to tonight's webinar. In today, we will be talking about something a bit different than what I usually talk about on my webinars. We'll be focusing more on the psychological aspect of trading, which I think is really important, right? And that's because a lot of people, they mainly focus only on technical analysis and not enough on trading psychology. So the front part of this webinar, I will dedicate it to kind of shifting you away from the idea that, hey, trading is all about technical analysis. Who gives a crap about, psychology? But what people don't really know is that technical analysis is, I'd say, 20% of what makes you a good trader, because every strategy works, right? Every strategy works. Now, you don't believe me, that's totally fine, but give me a bit and then I will prove it to you right here that every technical analysis strategy kind of works in a way, right? So I assume most of us here, including myself, we focus more on the charts, right? We are technical analysts. So here we have a typical Japanese candlestick chart that most of us trade off, I assume. So let's just assume for a second that you are a support resistance trader, right? Here we have, let me just draw it out for you. We have resistance, price broke out of it, came down. And for those that don't know, when we have resistance and it's broken, it normally turns into support. So here we have an example of that where price went up after retesting that resistance broken, turned into support. So here you would have taken a win. I won't go too much into detail on stop loss, entry, take profit, because that's not the point of this webinar. It's just to show you that here we have a winning trade based off support resistance, right? But moving on, now we have another example using the exact same chart where we have a Fibonacci trader, right? We have a high, a high here, and then a low here, and then price went up. Then you draw a Fib2, and you have the 0.5%, the 0.618 level, and then you took a long at the 50%, price went up, hit your take profit. Life's good, right? Life is good. So using those two examples as well as this example right here, maybe you are none of those traders, you are an indicator-based trader, right? Basically, what I'm trying to prove to you, or at least show you, is that there are so many ways to trade the markets, and there are so many people that trade different strategies and they can make money with them, right? And that's because of this very important concept. And the concept is that every technical analysis strategy out there, doesn't matter what you see, doesn't matter who tells you what, it is merely just a perspective to learn and interpret price action through, right? You could be a support resistance trader. You could be a supply demand trader. It doesn't matter because the market doesn't care and it doesn't know what you draw on the charts. Whatever you draw, the market doesn't care and doesn't know, right? Because they are all the same. They have general terms. Every strategy has a general term, right? It gives you a pattern that you can spot on the charts, right? It's a visual pattern that you can see on a Japanese candlestick chart, right? You pair that with some logic, right? Maybe, resistance, because like maybe let me draw it out. Maybe you have a resistance here, and then you're like, once it comes back up, we're gonna sell because price was selling and rejected in the past, so now it comes back up, we're gonna sell. It could be that, it could just be logic, because humans need logic to operate on a day-to-day basis, right? So it gives you logic as well as a pattern that you can see, and then it gives you an entry and exit criteria, right? Where do you enter? How do you enter? Where do you get out? And that in itself, it gives you the trade idea. This is your entire strategy right here. Most strategies is basically just this. This is your entire strategy right here, just in different forms, right? So you may look at me and say, oh my God, so every strategy works. Brian tells me everything works. So I know a friend that trades full time. He makes a lot of money trading full time. I just need to ask him to teach me how to use his strategy, right? Well, I mean, I wish I could say yeah, but the answer is, it's not really that easy. It's not really that easy. And because trading is subjective. Subjective meaning I could, be a very good trader trading support resistance, but my friend might use the same strategy that I do, but we don't have the same performance. It's subjective. It's like I could be going to practice basketball every day at 6 a.m. and I have a friend that does it, but it doesn't mean he will be better than me or that I will be better than him. It's subjective, right? One person's trash is another's treasure. A person could use support resistance and then be good at it, and the other person might not be. It's just that you soon realize that once you've been trading long enough, you've been in the market for around like a few years, maybe 2 years minimum, you start to realize after jumping from a strategy to strategy that it is all the time, actually, it's hardly ever the strategy's fault, and it's almost always the trader's fault, which means that it is more so the person driving the car rather than the car's person. The car's issue, right? And this line right here is super important. This right here, because a lot of people, they jump from strategy to strategy, right? They go online, they see a new strategy from a YouTube video, they take it and then they try to use it for around like 2-3 weeks, and then they realize, hey, I've lost money with this strategy, it doesn't work. Then they'll go on to YouTube again and they'll try to find a new strategy that looks good, because the strategies that you see online, the YouTube videos, they are all handpicked by the YouTuber themselves, which means they pick a period where the strategy is very, very good, and then they backtest it, they record it, they show it to you, and you think that this is the best thing ever. When really you take it, you learn it, it's not the best. It's just like every other strategy out there. So it is always the trader's fault, never the strategy's fault, because there's no perfect strategy and then there's no perfect trader. It's that simple. All right. So moving on to the next slide right here. So using that same example that I showed you just now, which is the market doesn't care what you draw on the charts. Say this is a normal chart, right? We have resistance right here, and we know it's resistance because we have a pivot point here. Price comes back, retests it, goes back down. Resistance, right? Everyone can agree that this is at least an area of resistance. And then suddenly, oh my God, price broke out of that resistance, right? So using that same example, resistance breaks become support. We should now see it come back down to retest it as support, correct? At least most people would look at it like this. Some, not most, some. And then guess what? Price comes back down, and then it bounces a bit, and then it goes. And you're like, what the? I thought, resistance breaks become support. Well, the market doesn't care you have a line there. It just does what it wants. We are just trying to follow the market and try to manage risk and trying to do what we think is what we think we are supposed to do. The market doesn't know you have a support line there, to be fair. So this means that whatever that you learn, it's still uncertain that the markets will actually go your way. That uncertainty is really what I think throws a lot of people off. They have a mentor telling them something, or they've seen something online, and they think this is the golden, the holy grail. This is the holy grail of trading. This has to work. But really, the markets are just filled with inconsistency, and it's really uncertain. The only certain thing about the market is how uncertain it is, right? The markets are inconsistent. No one knows if it's going up or down or sideways with high accuracy the entire time. They may be good at, making an educated guess. They may be good, most times, but it won't be 100% of the time, right? They cannot correctly predict 100% if it's going up, down, or sideways, right? So when you are faced with this boss, this big market of inconsistency and unpredictability, the only thing that you can do to be consistent is to make sure that your actions are consistent, right? You have to make sure that you yourself are consistent, even if the markets aren't. That's your best bet to beat the market. And the first thing that you have to do to be consistent is to change your mindset and to shift it towards a more realistic standpoint, which is to understand that trading in and itself, it is just a game of probabilities, right? Because if someone asks me, hey, Brian, is trading 50-50, right? It just goes up or down. I would say, well, if I were just to say go up or down from here, it is 50-50, right? But once you take into account, things like your entry, your stop loss, your take profit, the chances go really low. It's no longer 50-50 because all of these matter a lot, and this is your bread and butter of your trading strategy, right? So an analyst in most part stages have to kind of predict the long-term trend, if it is it going up or down here, but as a trader you have to do an analyst job, which is to predict if it's going up or down, and then you have to have an entry and an exit, right? So this popular saying goes is that a trader is an analyst with an entry and an exit, right? And if you are a technical trader, it means you are basically trading the charts and you are trading patterns, right? And the patterns are not things like Elliott waves or Fibonacci patterns or cipher patterns. And there's nothing wrong with those strategies, but they are all just what, why, where, when, and how. They are all still this. This is what makes every strategy. And if you trade any of those strategies, I'm not saying you're wrong. I'm just saying that you're trading a pattern, because we all trade patterns, including myself, right? So yeah, that is kind of the importance of this lesson, and that technical analysis is not a way to predict the markets. It is a risk management tool. What I mean by a risk management tool is that it is a way for us to use our capital, protect it, make sure our capital is protected, and then to get small amount of profits every time we trade. We want to protect our money first. That's your hard-earned money, man. That's your, you go to your job and you make the money. You want to protect it, or at least make sure that if you want to risk your capital, you want to have the odds in your favor, right? So it's not about predicting if it goes up or down, really. It's about correctly implementing an entry and an exit. Most times you place buy or sell. That really is a trading, right? I'm not trying to know why something went up or down too much, even though, I probably, it would be best if I knew why, but most times we don't know why it went up or down. It is purely a risk management tool. We get money and then we protect our capital. That for me at least is a technical analysis, right? And if you have any questions, I'll have a Q&A section at the end, so you can definitely ask me when the session arrives. Yeah, if you have any questions throughout the session, just type them down and then I'll answer them at the end. All right, so moving on, that was the part where I kind of like break down the laws of technical analysis, because I want to kind of bring you away from the mindset that everything is about drawing things on the charts, when really you should really be mastering yourself first before you try to dive into technical analysis, right? So this is just a recap, right? So many dismiss the importance of trading psychology. However, it is the secret to profitability in trading, right? Doesn't matter who you ask, every professional trader has mastered it, and anyone that cannot master it cannot be profitable. All right, so trading psychology important, right? But at the same time, it's not your simple, hey bro, just chill lah, dude, just chill, just be calm when you take a loss, just chill lah. How do I chill and be calm when I just lost like 500 ringgit in a trade? Dude, I worked for that money. How do I be calm when I do that? It's not possible. Not even for me, it's not possible. Which is why I've started to think of a way to teach a person step-by-step process to conquer it, right? So moving on, trading, once again, game of probabilities, nothing more, nothing less. When you take a trade, the market isn't, targeting you specifically, because, some people win, some people lose. It's all about chance and probabilities, right? So ask yourself two questions. How do I increase my chances of winning? And how do I decrease my chances of losing? Both of these, they go hand in hand, right? So one has to go up, one has to go down, right? It's that simple. Ask yourself these two questions. How do I, increase winning, decrease losing? That simple. And the first thing that people actually won't realize is that it all revolves around your trading plan. And your trading plan isn't your strategy, it's when you trade, why should you be trading at that time, and all of those stuff. So the first thing that I want to dive into, which is a part of the trading plan, is your schedule, right? Because each trader is a person, and each person is different, right? From their lifestyle to their schedule to their personality, everyone is different. And the good thing about that is that that's totally fine if you're different, right? If you're different from me, that's fine, because trading is supposed to complement you. It's so flexible that it should fit you and your lifestyle and your schedule and your personality. That's why I can say trading, everyone can join trading, but trading isn't for everyone. That's a good thing. Like, I can't play in the NBA because I'm not 6'3". I am not that tall, so I can never be in the NBA. But I can start trading. My friends can start trading, right? Trading doesn't care who you are; it's always there. So you can jump in whenever you are ready, and that's a good thing. I think that trading, exists the way it does. So anyway, went off on a tangent, but trading schedule, right? The one mistake that people think when they get into trading is that, oh, the more time you spend on the charts, the more money you make, right? But the truth is that people that actually trade for a living, than the people that make money at hedge funds or prop teams or just retail traders that trade full time, they don't trade the entire day, right? They don't sit in front of their computer to trade 8 hours a day. They don't do that, and that's because if you are trading, you want to bank on volume and movement of the markets, and movement and volume doesn't last the entire day. There are certain times of the markets which are a lot more volatile compared to other days. For example, if you trade crude palm oil futures, you'll notice that at the open at 10:30 a.m. is the most volume that you ever see throughout the day, as well as the final hour of trading from 5 p.m. to 6 p.m. Malaysian time is when it is most volatile, right? If you trade gold futures, for example, you'll notice that at night during the New York session, the market moves a lot more than it does in the morning Malaysian time. So it's not the same every single day, and professional traders know this, right? They don't sit in front of their computers every single day. Okay. Second is the most people, including myself, humans in general, are unable to stay intensely focused for more than a few hours. That's why most movies last like 2 hours to 3 hours, because any longer than that, people probably would lose their minds. They wouldn't be able to focus on information. So we are unable to stay intensely focused for more than a few hours a day, and trading is a very intense activity. And I know I've heard the same things, right? Oh, you can trade anywhere from your phone, from your laptop, wherever you are. I mean, you can, right? Assuming you have internet connection, but should you be doing that? Probably not. So we have to pick a time, right? Which is, if you're day trading, pick around 2 to 3 hours max day to trade. Pick a session of the day where you are available to trade, right? And for example, let's say I work from 9 a.m. to 6 p.m., right? And let's just say I take about an hour to commute to and from work, right? I go to work, I come home, it takes an hour. Excuse me. So it means I can only trade in hours before 8 a.m. and hours after 7 p.m. But let's just say I am an adult. What about cooking and cleaning, right? What about those other things I have to do outside of work? What markets are active around those times I'm free, right? So using the example here, Asian session, right, starts at 8 a.m. So palm oil markets opens at 10:30 a.m. I probably can't trade that if I was, I have to be at work, and I can't be on my phone. I probably can't trade any markets from 8 to 7 p.m. My drawing is horrible. Oh my goodness. But 8, 7. All right. So what is after 7, right? 7 to 11. Haha. Anyway, so let's just say I want to trade 7 to 11 p.m. What sessions are open then? Well, maybe you can trade the New York session, which happens around 8 to 9 p.m. our time, until midnight is when the volume starts to die down. So I want to trade the New York session. What is active during the New York session? Micro gold futures, right? The S&P, NASDAQ, you can trade those products because they have volume to be expected in those periods of time a day, right? So choosing the correct markets when you are free to trade, unbothered, is very, very important, because I don't want to be trading while my friends like, hey bro, come on, let's go and play game, or like someone's telling me something and I'm being bothered while I'm trading, and I can't focus. That's not fun at all, and that's not a really good trading environment. So make sure your environment is safe to trade in before you even start trading. All right. But sometimes some people are very, very busy. They have too many things to do, right? So let's say, what if there isn't a time frame for me to trade? There isn't like 2 to 3 hours a day I can trade, not even 30 minutes, not even an hour that I can trade. I'm super busy. What happens then? Well, maybe you have to try a more passive trading strategy, which means you are trading on the higher time frames, right? Such as the 4 hour or the daily, things that don't need much management and you don't have to be glued to the screen every single hour. Because if you trade on, say, maybe the 4 hour is a good time frame, or maybe even the, oh, maybe not that, not this one, but maybe the 1 hour. This kind of stick prints every 1 hour. You're telling me you don't have the time to go and pee every hour? I don't think so. But what about the 4 hour? A candle prints every 4 hours. We have an open and a close, and then this happens, 4 hours. You're telling me you don't have time to look at your phone once every 4 hours for like maybe like a minute or two? Impossible. So try a more passive trading strategy. Of course, there are its downfalls using this, especially if you trade futures, because as you know, it's you will need to have more capital because you are likely to sustain more, like bigger losses. You will sustain less losses, I think, but the losses will be big because of the stop loss placement, your entry, and everything will be like just bigger compared to if you're day trading. But that's totally fine. I know a lot of people that swing trade, which is trade on the hard time frames for a living, and they totally can do it. So it just depends on you. So, well, tangent, let's just do a recap, right? Recap on trading schedule. Choose a time where you can trade with full focus or attention for around 30 minutes to 3 hours a day, which is for scalpers or intraday traders. Choose a suitable asset to trade, which is when you can trade around those times. And third, if you can't intraday trade or scalp, then you are forced to choose a more passive trading strategy by trading on the higher time frames. Funny enough, there actually is a person that I know that he trades 70 minutes a day, which is every day at around 9:30 p.m. to 9:50 p.m. He trades for 70 minutes a day because he found out that after trading for a long time, after the 70-minute mark is when he starts to do stupid trades. So he caps his trading to just 70 minutes of intense focus trading and scalping, and then he calls it a day. That is also possible. Just 30 minutes, 10 minutes, 70 minutes a day, and you might be able to scalp something, right? So many ways to trade the markets, that's one of them. And second part of this trading plan is that you have to pick up professional habits from pro traders, right? And most people that are pro traders were once hold on, let me just fix my microphone real quick. I see a comment on that. All right, so I hope this helps, but most traders that are pro traders were once retail traders, right? So the first thing that you have to do as a retail trader that you can learn from pro traders is that you have to analyze your trades and your actions, right? Because like I said, every person is different. Every person is a different individual, so you have to analyze your specific traits that are different from others, right? And this here is an example of a weak trading psychology. And now if you have any of these issues, don't be afraid to say you have them, because I had them and everyone has had them, right? The way you have to improve is to accept that you have these issues, to then proceed to improve and work on them. Don't run away, face them like a pro trader would, and then try to solve them, right? So here are some examples right here. I hope you can see my spotlight. Let me just use my pen real quick. Let me just choose red. So let's just look on the left portion. Let's just say your trades are in drawdown, right? In drawdown. What a lot of people do is that they would move their stop loss, or even worse, they would remove their stop loss because they're afraid of being wrong, and then they're afraid of taking a losing trade. So they remove their stop loss, hoping that the market would reverse. They base their trade on hope. This in turn lets the trades run into further drawdown, right? It means they lose more than they actually would have if they have, you know, kept their stop loss, right? Or if they've lost trade, they would do something like revenge trading, which is, oh my God, I lost 50 ringgit. I have to trade more to make back that 50 ringgit. So they would try to take impulsive trades to try and recover their losses, which ends up causing them to lose more than they intended, right? They think about profits only, but they don't think about risk, which is the number one issue that many people know, is that they think about rewards first, but they never think about the risk. And when they can't handle the risk, and then once they lose, they start to go crazy. And that's very normal. That's very, very common, right? So don't do any of these. So that is if your trades are in drawdown. But if your trades are in profits, you could also still have issues, right? Let me move on to the right hand side of the screen right now. So let's just say your trades are in profit, right? Sometimes people would close their trades early. Say maybe they want to target 20 points. Suddenly it goes up to 10 points in profit. They're like, what if the market reverses and I lose my 10 points of profits? Then they close it at 10 points when the market will have went up to their profit of 20 points, right? That happens. And what that will do is that long term you would lose, because like you think you are making you think you are risking 10 ringgit to make 30 ringgit, but long term, if this happens, long term, what you would see is that you're actually risking like maybe 10 ringgit to you are risking 10 ringgit to lose 10 to make 10 ringgit basically, and that kind of gives you a negative risk reward ratio, and this comes from you being afraid of losing profits, which makes you to end up winning less than you have backtested or intended to actually win, right? So these are signs of weak psychology, which threatens a lot of people, and it's normal, it's totally fine. And I'm here to help you combat them. So next up is understand that you can control what happens before a trade is executed, not after. Meaning you can backtest, you can sleep good, eat good, be in a good mood, and all of that you can control. But you can't control what the market does after you enter the trade, which is an issue many people have, which is where they place a trade and then they pray to God that it goes up or down, and there's no use praying because the trade is already open. You are already running, a win or a loss, and once the trade is open, you are really at the market's mercy. Whether it goes up or down is no longer in your control. What you had control over is you placing buy or sell. That's what you have control over, not the markets, not anything else. Just you clicking the button. You have control over that. So it's not the markets you should master. It's not the markets at all you should master. It's really yourself you should master. Why did you click that buy or sell? Where's your exit? Why is it there and not there? Why is it at A and not B? Master yourself before you even think about mastering the markets, right? And one more thing is that sometimes people they think, oh my god, I've won like 7 trades out of 10 trades, but for some reason when I take one loss, I lost like 1,000, like 2,000 ringgit, but my wins are like only 200-300 ringgit. So I'm winning many trades, but then I'm losing little trades that wipe out my entire profits, right? And this is mainly due to the lack of confidence or conviction in your strategy, right? You don't know when you click buy or sell, is it going to go up or down? You don't know with certainty. But if you lack confidence, if you lack this thing, then your psychology, your weakness in your psychology will start to show its hand. Closing trades early, moving stop losses, no stop loss, praying it will go up or down in your direction, and causing you to lose more than you actually wanted to, right? All of this is because you don't know if you actually go up or down, and no one knows if you go up or down. But what you can do is you can tell yourself, hey, I've backtested my strategy, I've practiced enough, I have done my due diligence, I have done research, and from my research, what I see is that 8 times out of 10, the market will respect my strategy. That's the only thing you can say. It might not respect your strategy, that's fine, but then you've already done your research and you are confident in your strategy, right? So these issues all stem from a lack of data collection. They stem from a lack of backtesting. So how do we fix it? Well, easy. you backtest, and then you have a backtesting strategy, and then you have a structured trading plan. That's how you fix this issue. Let me move on to the next part, which is something, the next part is pretty much the bread and butter of a trading plan, right? So first off, you have your trading strategy. Obviously, you have to have some form of idea on how to trade. So your entry and exit criteria, your entry confirmations, things like how many time frames do I want to use? What are my candlestick patterns I want to enter from? Is it an engulfing? Is it a hammer? What's it called again? Morning star, hammer, a hammer candlestick. What do I want to see to confirm my entry? And what are my trading sessions of the day? All of these are super duper important. And I'll move on to the next slide right here, which is what do you want to do? Now, if you don't have this written down, write this down on a piece of paper and then stick it to your phone, stick it to your computer, your laptop, your desktop, whatever, stick it there so you know what you're doing. Do a checklist of this every single day before you trade so that you know to yourself, this is what I'm going to do. And every time you break a rule and you don't follow the plan, give yourself some punishment. Do like a push-up, or if you can't do a push-up, then I don't know, just any punishment would do, I guess. But what do you want to do? Do you want to go long or short? What is your bias for the day or the week? And this is important because while a lot of people tell you you can go long or short and still have a high chance of winning, if you want to improve your odds, you kind of have to pick a side, either go long or go short. If you want to go long and there's no long opportunities, then I don't trade. Right? It's that simple. What's your bias for the day or even the week? Next is why. Why you have that bias? Is it because you saw support break, so you're selling? Is it because you saw a shift bearish, that's why you're selling? Is it because the RSI is overbought or oversold, and then you're selling? Why do you have that bias? Convince yourself why you have that bias so you can take a trade. Convince yourself. When do you want to enter? Is it at market open? Is it a certain time of the day? Is it when there's volume? Is it when it's almost lunch break? When do you want to enter? Pick a time frame, which is in most cases it is when you are trading, like your trading session. Next is where do you want to enter? At a high or low? At a supply or demand zone? EMA crossovers? What's your entry pattern? Because I know I want to buy around a certain area, for example. Let's just say I want to buy around, let's just say this is a support. Let's just say I want to buy here. But then there comes the questions, do I put my limit order here? Do I market execute? Where's my stop loss? So you can ask yourself this question, do I want to enter on a pattern like a break of a high and a pullback to enter somewhere right here? Or do I want to enter with a limit like this, pending order? What do I want to see the market do for me to enter? And I can't teach you this because I'm pretty sure we don't trade the same way. So I can't give you an answer for this, but this is something you have to go and do research on your own, which is what I've done. I've done all of this. I've spent hours in my room just back testing 6 months of data, a year of data, live testing it. I've done all of these things. So these are things that you have to do on your own time to figure out, right? So next is the how do you want to enter, which is what I covered just now. Like, do you wait for confirmations? Do you just pending order it and put a stop loss below? So all these questions are part of your trading strategy, right? And if you can't answer these questions, you can't trade, because I don't want you to go out onto the market, click buy or sell, and waste your money. I don't want that to happen. I want to save your capital, right? Because I know just how hurtful it is to lose like 5 days worth of salary in just one trade, and you have bills to pay, you have people to take care of, and that is hurtful. So I want you to answer all of these questions with certainty. And if any of these questions you don't know how to answer, don't trade yet. Go and backtest, go and study, right? Don't trade live yet. The markets are always there. Take your time and take it slow. All right. So that's your trading strategy. Next up, we have backtesting, right? which is to test your idea on past data and see how it performs across time periods like a year, 5 years, 7 years even. People ask me like, what is a good time period to backtest? And I would say at least 6 months. If possible, a year. If you want to trade gold, backtest the previous year's gold. Backtest at least the previous year's gold, like 1 year if possible. 6 months is the minimum, but at least a year, right? So when you're backtesting, you're not just clicking buy or sell. Each time you take a trade, take a screenshot of it and then write down what patterns that you see, like what's your stop loss average, what's your average take profit target, what are the patterns of candlesticks that you see always appear every time you take a trade, right? If you took a loss, what could you have done to not take a loss, right? All those questions you have to ask yourself. And in the next slide here, this is an example of a backtesting database. Now, this is not mine. This is my friend that I used to talk to. Well, I mean, I used to talk to him, but like this is what he shared to me back then, and I'm like, oh my god, this is a backtesting data sheet. And it was actually after I saw this data sheet that I was like, I need this. I need to write it down. Things like things like the trading criteria right here: entry time, closing date, closing time, what's the month, what's the drawdown in pips, what's the percentage, what's the entry size, risk reward ratio, and all of those things. All of these things people are doing, and if you don't do this, you can't compete against these people, because these people are the winning traders right here, right? So you need to have something like this written down so you can see for your own eyes that you actually have data collection, and it's not just you telling yourself something. It's actually proven in something like a backtesting database, right? So thirdly is, after you learn to backtest for maybe 6 months to a year, you have to move on to forward testing, right? Which is using the knowledge from backtesting and then testing it out on the live markets in real time. You could call it demo trading or just forward testing, right? But you don't want to forward test for too long. Just 1 to 3 months is good. Excuse me. About 1 to 3 months is good, and then you move on to trying it out on small capital or trying it out on a live account. And the reason why I don't want you to spend too much time on backtesting is because backtesting doesn't exactly show you the real conditions of live trading, because you are backtesting, you're clicking the forward button and it's just playing out. It's not really a good measure of live testing, and forward testing is also not a really good measure of live testing, because you are demo trading, and when you demo trade, it's fake money, it's fugazi, it's not real, right? But when you trade real money, that's your money that you can lose. You start to kind of take a hit on your nervousness. You try to panic a lot more, you close early, you exit too early, things like that. So try to practice your strategies. Like the whole point of backtesting and forward testing right here is to make sure that you are familiar with your strategy, right? But actually using it to make money is a different ball game, because now you have money involved, and when you have money involved, everything changes, right? Everything changes. So don't spend too long on forward testing and back testing, and try to move them once you've met the minimum criteria, basically, which is around 6 months to a year. Trade like a forward test or demo trade for around 1 month, then you should be good to go onto small capital, right? And next up is something called a trade journal, right? So a trade journal is kind of like the backtesting database, but this one is more towards let me just change my pen color real quick. This one is more for when you are live trading or for testing. Note down things like, what were you thinking going into the session? How were you feeling when you took a loss? How were you feeling when you took a win? Why you took them? Note all of these things down. Note down the market conditions. Are we ranging? Are we trending? Whatever that you think is important to your strategy. What was it like? Or did we have any news releases? Was it supply and demand for palm oil? Was it CPI for gold trading? So note down all of these things so you know, and you can refer back to them at the end of every week or every month. Refer back to your notes and see what you did right, what you did wrong, right? So moving on, we have the practice and refine stage, which is the stage every trader is at, because the markets are always changing. You have to always be practicing and refining because conditions of the market are always changing, right? So you should always refine your strategy. All right, so this is, oh, sorry, that's the bread and butter of a trading plan, I'd say. All of this is important for you to be profitable. So do take your time in each step. Don't rush it. Don't rush it. Just follow the steps if possible. And understand that trading is a really good skill that if you can correctly approach, it is the best thing ever, right? But you have to give it time, and it's going to be a very, very long-term plan, right? Trading is a very long game. It's not a short game. It's not who spins the fastest. It is who can run the longest when you don't know where the end line is. Can you truly run when you don't know where the end is, right? So you have to give it time, and time gives you more experience, and more experience gives you more confidence, right? More confidence gives you the ability to let your strategy play out, to let your trades play out. And all of these stem from a strong trading psychology. All of these, right? From the time spent to the experience to the confidence to profitable trades. All of these are signs of a healthy and strong trading psychology. Something that I heard that really made sense was that experience provides confidence, and confidence allows you to execute flawlessly. So this is a line that stuck with me for the years I've been trading, and this one really made sense to me. If I don't have experience, I can't be confident, and if I can't be confident, I can't execute the way I'm supposed to execute. So always make sure you have all of these in mind when you trade. All right, so next up we have kind of like a special part, which is I actually have a service for my clients. Now it's free, right? It's free. Um, it is only for my clients, which is clients under PKC, under the Kuching branch. But if you are in other states or other countries, you can also be a part of this service, right? So I trade every day the palm oil market, crude palm oil futures market, right? So what I do is I will send my, let me just put it red. I would send my daily markups of technical analysis charts for both the long-term and intraday trades. So I am personally a day trader, but I do send long-term ideas as well into the group. So it is for key areas of support or resistance, and at the end of the day, I will also do a market breakdown, as well as supply and demand data release, right? So the good news is that because it is a technical strategy, you could use them across different assets. Doesn't matter if you trade gold or palm oil or the S&P, you can still use them, right? And the good news is that you get into personal contact with me where I can give you a further in-depth explanation of the strategies, that I will be teaching in the group itself. Now, this is not a signal service, right? Legally, I can't give you a buy or a sell call because I have a license. I can't give you that. This is only for general educational purposes only, and it's not any recommendations to buy or sell anything, right? So I'll give you a few examples right here. So this is recent trade examples just from today is what date is it today? Today it's the 17th, right? So this was a week ago, literally like last Wednesday. I sent this to my clients. I don't know if you can see this, but I sent it to my clients before market opened at 10:30 a.m. And I said, this is the daily time frame for more long-term stuff. I'll move on to the next one, which is I basically told my clients, hey, I'm looking to buy around these areas. Of course, I will highlight the ones that are more important, like this, or like this, and I'll tell them, hey, I'm looking for price to come up here so I can take a sell, or come down here to take a long. Basically, all of these are drawn out onto the charts for you. And at the end of the day, I will send a market review telling you what my thought process was throughout the trading day. So now, not every day will be this in depth, because not every day is um, a market that I had to break down so in depth, But some days I do break down really, really in depthly. Here you can see many different markings that I write out for my clients to review, so they can understand how I personally trade better without actually breaking the law by giving you buy or sell signals. This is the best way I can do that, and it's also the best way because I can teach you how to fish, but I don't want to spoon feed you everything, because once I'm maybe one day I'm gone, and then you can't trade anymore. So I'm trying to teach my clients how to fish, basically, while I try to catch fish as well. So constant market breakdowns, so like this, as well as trading support, telling you why I did it a certain way that I did. All of these are WhatsApp messages, because it is a forecast group. Um, and then yeah, just market breakdowns and stuff like these. So yeah, so if you are interested in learning the way that I trade, right, by joining this group, all you have to do is just open an account under us, right? So just scan this QR code, and you can open the account under us. And yeah, I hope to see you guys in my group, because I think I can definitely help you a lot more one-on-one with my clients, if possible. Yeah. So all right, so do you have any other questions that you can have? I have a few here actually, but if you have any questions right now, do leave them in the question box or the chat box so I can read them. But before that, let me just take a sip of water. I've been talking for an hour straight. I need that water. All right, so the first question is, what would be a good trade even if you lose money? Even if you lose money, a good trade is a trade that you took according to your plan. So if you stuck to your rules and you took a trade and then you lost, it's a good trade. That's still a good trade. Like today, I took a loss, but I don't really care because I follow my plan, and my plan tells me that long term I'm gonna make money. It's just that I lose maybe 3 trades out of 10, and this just happens to be one of those trades. So a good trade is a trade that you stuck to regardless if you make money or not. That's a good trade, right? All right, next is, should I make a trade like a business without emotions? Well, everyone wants to trade without emotions, but as humans, like I said, it's not that easy because humans have emotions, right? And as much as people want to say, "Oh, just close your emotions," I'm like, dude, I lost 500 ring today. I'm gonna cry in the toilet. I don't care. But the way to kind of like reduce, not it's not to block off your emotions, it's to understand that you being emotional would not help you in any way. If you're emotional now, it's going to make things worse. So try to remove the emotional part and use logic to think to think when you should be trading, and all of that comes from practice and back testing and all those stuff. Imagine if I don't know how to box, like boxing, right? I don't know how to box, and I'm getting punched left and right. You think I wouldn't be emotional? I would be angry, you know. So what I should do is to try and practice boxing like I practice trading, so that when I do take a hit, I'm okay with it. I'm not angry, right? I'm calm and I'm collected, right? And all that comes with practice. All right, next is, do you believe the efficient market hypothesis is true? For those that don't know, the EMH hypothesis is basically a theory that says that the market is kind of lingering around the not strong efficient, but kind of like in the midpoint of strong and weak efficient, meaning that whatever news release that you see has already been priced into the markets, be it from insider leaks or be it from people just taking, yeah, basically just insider leaks at least, you know. I don't know if it's true or not, but what I do know is that it is the only hypothesis that can explain 70% of what happens in the market. It is not 100% true because the markets are in some form of way inconsistent, and it's also not the truth because if it were the truth, it wouldn't be a hypothesis. It would be 100% true for all market occurrences, but it's not. That's why it's a theory. But I'd say, yeah, for most part, it's probably true. You know. Next is, what is a good risk to reward ratio? This one depends on your strategy, but what you have to understand is that, say you have a high win rate, you are going to have a lower risk to reward ratio. For those that don't know what an RR ratio is, it's basically I'm risking $10 to make $40, right? So I have a 1 to 4 RR ratio. So I'd say the best one is probably 1 to 2 to 1 point. No, sorry. The best one would be like 1 to 2 to like 1 to 3 is what I've seen to be more sustainable. Anything higher than that, I think, would probably be a bit more inconsistent. But then again, it's not wrong. It's just from what I've seen and what I think is suitable is this ratio right here. 101 is also fine, but that means you have to have a really high win rate to at least break even, you know, on your trading. This one is kind of like a good middle ground. This one is probably the best and the most consistent I've seen so far from my testing. But then again, you know, everything works just, you know, it depends on yourself basically. Next up is, how do you handle losing streaks? 5 to 10 trades. Wow. Well, first I have to identify if I even stuck to my trading plan for all those 5 to 10 trades. Because sometimes I do also take impulsive trades that weren't part of the plan. But if the trades that I took were part of the plan and I lost like 5 to 10 trades, I'm gonna have to take a break. I have to take a break for like a week or two to kind of reset my mindset and to reset my bias. But within those 1 to 2 weeks, I won't be off the markets. I will just be moving away from live trading for a bit to kind of recoup myself, you know, and to try to see, is it my strategy failing for this market condition, or is it me as a trader that's failing myself? Because not all strategies are profitable in every market condition, right? The markets are either ranging, or they are going down, or they're going up, trending basically. So some strategies work really well when it's ranging, some work really well when it's trending. It's impossible your strategy is really good in both of these scenarios, quite frankly. So pick and choose, is it the conditions of the markets that are bad, or is it me that's messing things up? So yeah. All right, so I will have one more, which is, how do I join your group if I already have a Fleet Capital account? Do I need to scan the QR code and open the other account? Unfortunately, I do want to keep this service to clients under me myself and my branch as well, because it's kind of like a service I give to my own clients. And I don't want to sound mean, but at the moment, I do only offer this to my clients. So whether or not you want to transfer to me or you want to open a new account is under your own discretion. But as of now, I will only offer these services to my clients only. So thank you for that. That was a really good question, actually. Any tips for the beginner traders, especially for the broke ones? Well, first off, if you are broke, you shouldn't be trading. You should be making money from a job. That's what I want to say first, because if you don't have money, you can't trade, you know. I've been there as a student and I've done that. It definitely wasn't fun. So first off, at least make some money from a job or like a side hustle or something. Make active income first and then put a part of that into learning how to trade. Basically, that's the only tip I would give to new traders, is to get income first. Okay, so last one, I'm gonna have, how do I gain confidence to execute an order? This morning, I know my patterns and confidence to take a trade, but I'm not confident enough to enter the market. Well, the only way to combat that, my friend, is really to just test. If I ask you the question right now, have you backtested 6 months of data? Have you backtested like 1 year of data? Have you? Have you gathered the information to give you the confidence? If your answer is no to any of those questions, then you know what to do. I can't teach you how to trade. I can help you trade. Basically, I can teach you the steps that I did to help myself and what other people told me worked for me, but I can't directly manage your money for you. I'm not a fund manager, right? So you have to do the hard work yourself. I can be there to help you if you are in my group, but in the end of the day, it's still you clicking by yourself. It's not me. It's not anyone else. It's you. So it's you over everything. All right. All right. So I think that's pretty much it for today. Yeah, if you have any other questions, you can also send me an email after the event, and I will, answer your questions. But you can contact us, here through our Facebook, our YouTube, our Telegram. This webinar will be uploaded onto YouTube, so do stay tuned for that. You can also follow our Instagram, and our website is here at flip.com.my. Right here, that's our website. And if you want to get into personal contact with me, this is the phone number as well as the email address for my branch. So if you want to open an account with us, or you have more questions, do drop me an email and I'll get back to your email when I'm back in the office, right? Which is technically tomorrow. So yeah, or if you're in Kuching, even better. If you're in Kuching, drop by to our office right here, and we could talk about trading for a bit before I get back to doing my work. So yeah, thank you all for coming tonight. For those that stayed towards the end, thank you so much, and I hope this session has been proven to be useful to you. But remember, trading is a long-term game. It's not short-term. It's really subjective. It's really tough at times. It has its ups and downs. But if you truly believe that trading has a place for you in the future, definitely keep going at it. But at the same time, don't over risk your capital. Don't throw away hard-earned money, right? And just play it safe. There's nothing wrong with playing it safe, right? But take like 30 minutes to an hour every day to study, and I hope to see you profitable when we meet, if we meet, of course, if we meet. Yeah, that's pretty much it for this session. Thank you for coming, and I'll see you guys in the next webinar, which will probably be about technical analysis because everyone loves that. So yeah, right. See ya. Have a good one.